All right, guys. Hope everyone's doing well. I actually wanted to make a video saying, and I meant to actually post this a few days ago, and I'm sorry that I'm a little late to it, but I'm actually back to being bullish on this market. I think, honestly, the 0.25 rate cut that caused this crash has been priced in. Price just wasn't willing to go lower, and you can see it's just been starting to break out to the upside. So since there was an inflation report on Wednesday, I believe, and inflation's up higher than expected. And so when I saw that, I thought, that's just going to drive prices up. So as you can see, prices are going up, right? So now there is going to be another rate decision in March. And so obviously stay tuned for that. If they cut rates again, I would expect the market to crash. But if they hold rates, they're not going to raise rates. I highly doubt they raise rates, but if they hold rates, I would expect the market it can just resume going up. So in anticipation that that's actually pretty likely, I think it's just going to go up, and with high inflation, it's going to drive up prices. So I don't have much to say for this video for today. It's probably going to be pretty short, but yeah, I've just been looking for longs again. If you were in my Discord, I already had updated that yesterday or 2 days ago. And about my Discord, it got flooded with bots. I'm new to the Discord thing. I don't really know how to work an auto mod. And I tried to set one up, but it was actually a little more complicated than I expected. It was just kind of new territory for me. So for now, the Discord's closed. You can't really get into it. It just got flooded with bots. I don't know what the heck was happening. Like, I didn't even think it was going to be a popular Discord or anything. But then all of a sudden, just like dozens and dozens of bots just started coming in, and so like I just had to close it up. So sorry about that. But yeah, anyway, guys, it just looks like inflation's going to drive prices up, and since they're not cutting rates aggressively, and they might not cut rates for a while, I would expect prices to actually go up on these assets. So, but yeah, stay tuned. If rate cut happens, expect prices to sell, expect the market to crash, okay? But as long as rates are held, um, market will go up, right? But just be careful. Yeah, if they cut rates, which again, they probably will eventually cut rates again. So every time that there's an anticipation of a rate cut soon or rates get cut, the market will either crash right before the rate cut or it'll crash right after the rate cut. And that's just how it tends to work, because it just has to do with how banks adjust their lending profile to the new rates. There's a reduction in available credit, and that is a little bit deflationary, very temporarily, and that causes a market correction. And then once they've adjusted to it with their new lending, they then the market starts going back up again. Another thing that has me thinking, though, rates definitely won't be going up. They're going to be held, or they're going to go lower eventually, is that banks are advertising a lot of fixed rate stuff. I've seen like so many banks are promoting like, get locked in at your fixed rate. And here's the thing, the banks, they're never looking out for your best interest. Money is a zero-sum game. So like how at the beginning of 2022, banks were promoting like a lot of mortgages and stuff. They're saying get in at a low rate, but it was variable rates. But they're like, the rates are low right now, so get a mortgage. But then obviously they upped the rates on everyone that got it. Well, now they're advertising fixed rates. And so if they're advertising fixed rates, that means they're anticipating rates to not go up more. So they're trying to lock you in at a high rate. And if you are locked in at that rate, the only way for you to get a better rate is to refinance. And I saw some comments on a video I posted recently where everyone was like, just refinance, bro. And I'm like, it's not that simple, dude. Do you realize that, first off, refinancing actually costs fees? Like, you'll be paying basically a couple months at least worth of interest in the refinance fee. You have to pay a fee when you refinance your loan or your credit, right? You have to pay a fee, and that fee usually accounts for like 2-3 months worth of the loan's payments. And also you have to get approved for refinancing. Like, there's no guarantee that a financial institution will just take on, like, will just let you refinance, right? Like if they don't think they have something to benefit from it, like basically eventually screwing you over on interest rates on their end, they can just deny you. So it's not just as simple as just get refinanced. Like I I know I have, and I can't be just like an outlier. I know plenty of people think they're just going to get refinancing easily, and then when it comes to them actually trying to refinance, they struggle to actually find a lender who will allow them to refinance all of their debt. Like usually you can only refinance a portion of your debt. So, you know, that's just uh, to those people who say that, like I honestly would just say you're a bit uninformed or inexperienced when it comes to refinancing. It's really not just like a walk in the park. Like sometimes it's pretty difficult because somebody's taking on a financial institution's taking on risk by allowing you to refinance at a more favorable rate for yourself. And they're doing it because they want to hopefully get you as a customer, that they'll eventually get an advantage over you. But if they don't see an opportunity to gain an advantage over you, like it's not easy to refinance, especially like if your credit isn't great. Good luck. Okay, so don't just take for granted that you can refinance, because you can't always refinance. Anyway, kind of went off a tangent, but I didn't have a lot else to talk about anyway. So yeah, I'm looking at this point. I give in. I'm looking for higher prices. Inflation's up. It's going to drive prices up. They adjusted. This is the adjusted. They adjusted for the 0.25 basis points. As you can see, the 0.25, it doesn't crash the market as much as the anticipation of the 2.5 rates cuts were, right? Which happened right after this, but the market sometimes, with insider information and stuff, they get ahead of that. So right before those big rate cuts, there was a market crash. That's not a coincidence, right? And that's not a huge crash, but that's 17%. That's not nothing. That's almost 20% is where they considered a crash. It almost hit the criteria for a crash. But yeah, anyway, higher prices. Keep your eyes peeled for rate decisions, because that's ultimately going to determine the short-term outlook of the market. Obviously, the long-term outlook of the market is always up. So anyway, take care, guys. I'll see you next time. And yep, just good luck with trading. Keep getting better. All right, take care.